if you can little bit
Pardon?
just overview for prudence, it will be good for us if you don't mind.
I didn't get you, sir.
If you overview the prudence,
Oh, okay. No problem.
yeah.
Adan is going on. Give me some time. Huh?
Yeah.
Okay. All right. Now,
Yeah.
talking about prudence. Now, before we really relating the prudence concept to accounting, uh, we got to understand prudence in our life, a prudent lifestyle. What do you think the meaning of that? Prudent lifestyle. How many of you watching Mr. Bean?
Pardon?
Mr. Bean. How many of you watching
Yeah.
Mr. Bean?
I watch.
Definitely.
Yeah, I watch my time. Yeah.
So in that, you see him how careful that fellow is. When he go to park his car in a parking lot, or when he want to do some shopping, or when he want to sleep, or when he want to travel, is he a very careful guy or a reckless guy?
Yeah,
What do you think?
sharp.
He's a very reckless guy.
Reckless,
Am I right?
yeah.
So then his lifestyle is right opposite to a prudent lifestyle.
Yeah.
Okay.
He doesn't care about his vehicle, and he doesn't care about other vehicle also. He will put the other vehicle into a damage, and then he will go and park his vehicle. So what you try to mean when you say prudent lifestyle, a cautious. A cautious lifestyle.
Means
You
sharp
are
or extra intelligent.
sharp not necessarily required you to be cautious. You could be sharp or you are not sharp, but some people are cautious. Now, I hope all of us have experience when you are going out of home, you are locking your door, correct?
Yeah.
Yes.
And then you take out the key, and then what you do? You open and see. Correct?
Yeah.
Some people, what they will do, they will check this, they will go to the car, they will go inside, start the car, maybe they will go 100 meters, and the doubt will develop. Did I surely close the door or not? Then he will come back. And then he will stop the car, and then he will again go and open and see. This type of lifestyle, we call it overcaution. What do you call this? This is an overcautious lifestyle. So, human beings need to be prudent. Like before you drive, you got to have your driving license, you got to check your brakes, you got to ensure you are wearing the seat belt. All this doesn't mean, or not necessarily, you should be too much careful about it. When it comes to financial reporting, our practice, our preparation should incorporate prudence. Should incorporate prudence. Now, what does this prudence mean? Assets and income should never be overstated. Understand this term?
No. Can you elaborate?
Can you read this?
Yeah, we can read this. Assets and income should never be over.
Assets and income should never be overstated. Literal meaning of this sentence, I hope all of you understand that. Correct?
But well, if you can elaborate about this.
Yeah, I'm going to elaborate. Let's say we are on now today, supposing we are on 28th January. And some potential customers promised that they're going to give you business and they will pay you on this date. When they will pay you?
End of the month, okay.
Yeah, on 31st January, you're going to receive some money, let's say 5,000 riyal. Now, where are you now? On which date you are in?
20.
And have you received the cash?
No.
Now what you do, you become smart, you call one of your friends and you tell him, look, my friend, a customer will pay me 5,000 by 31st January. So, could you please lend me 5,000 for some of my expenses? I will pay you on 31st January. And your friend is trusting you, he giving you that money. So you receive 5,000 as a loan. And you carry out some unnecessary expenses. What is your plan, or what is your take? What's your justification? You think that this customer will pay me on 31st January 5,000 riyal for some services I might offer to them. Correct?
Correct, yeah.
Now, based on that, he went and borrowed 5,000 from one of his friends. And then he went to party, he went to hotel, he went in, 5-star hotel, he had a big meal, so many outings and all that. He spent all these 5,000 riyals, like say 28th of January. Now, how many days between?
3 days.
3 days left. I'm very comfortable. Why I'm comfortable?
Because you will have
Because the
5,000
customer will pay me when?
at the end of the month, 31st.
Yeah, but do we have any formal commitment from the customer?
No, verbally only.
Verbally only. We don't have any formal commitment. Now, we reach into 31st January and customer could say that, I'm really sorry, we have changed our plan, we are postponing the required services to another 4 months. Where will we stand now?
Broke.
You will be in a serious trouble, right?
Yeah.
This is exactly what I try to mean. You should never be overstating your assets or your income. Now, if you receiving this 5,000 on 31st January, meaning you're going to receive some income. Am I right?
Yes, yes.
When you plan this, when you make the anticipation,
First,
you are anticipating on
20th.
20th. So prudent concept says you should never overstating or anticipating income or such, unless otherwise it's recognized in monetary terms. Should never anticipate income and or assets unless otherwise recognized in monetary terms. Do you get the meaning of this sentence?
Yes, clear.
So that is exactly what the now this is the one side of the prudence. The other side of the prudence, known expenses and liabilities should be recognized or should never be understated. Do you understand the meaning of this phrase? Habibi,
Yeah, now
Kalami.
it's clear. Yeah, now it's clear.
Okay.
Now,
Coming
yeah,
back to this timeline on see today. Okay, I'll do another timeline here. On January 31st, January. On 22nd, you are walking on the corridor, walking on the corridor, and you see that fire extinguisher. I hope all of you know what the fire extinguisher means.
yeah.
Now you see the fire extinguisher and you see that sticker. Every fire extinguisher has a sticker. Correct?
Yes. Expiration and
This extinguisher will have expiry date. You have read it. Expiry date is on 30 January. And it is one of the legal requirements to have valid fire extinguisher with your business. Sa walala.
Sorry.
Yes or no, right? It is definitely a requirement.
Yes.
When you saw this, you saw this on 22nd.
Okay.
And on 30, now okay, so, to renew this fire extinguisher in a reasonably big company, you will not have only one fire extinguisher. Maybe you have 100. I remember I was working in one power plant in the factory. I personally had to count fire extinguishers 1,950 pieces.
Big size.
You can imagine the size.
Yeah.
Can you imagine the size?
Well, it's a big
I
size.
have to keep a piece of paper, and then I have to write the reference in the barcode, and then tick, and then write the reference, tick. Like that, I need to complete the counting. 1,950 pieces. So And if you had to renew, example, you got to pay, let's assume $50. You got to pay $50 for one fire extinguisher. So if you suppose having 50 fire extinguishers, then how much it will be? $2,500, right?
Mhm.
Now, when the cash flow is due, when? Cash flow is due on which date? Cash flow is due on 30
Okay.
January. But where are we now?
22nd.
22nd of January. Now, if you read the sentence now, known expenses and liabilities should be recognized. Now, by now, on 22nd, you got to know about this or not?
No, really.
Hmm?
Still. No.
Why not?
22nd.
You have seen it, right? You have seen the sticker, and then you found that on 30th January you had to pay for.
Okay.
So is it bad to recognize this now? To show as an expense or as a liability? What do you think?
Should be recognized within the same month because the expense
Yes, yeah,
considered on
based on my example, it is within the same month.
yeah.
Correct? But it could also be possible
Yeah.
you could have on the 2nd of February. The cash flow will be due on 2nd of February, but you have to recognize as an expense. So, known expenses should be recognized or should never be understated. Known expenses and liabilities. This is the other part of the prudence. Am I making myself clear about prudence now? Mr. Zubair, you understood? Sir, tell me. Hello? Mr.
Yeah.
Zubair, you are with me or not?
Yeah.
So
Yeah.
you okay? You understood the prudence or you want any more elaboration? Hmm?
Yeah. Understand.
Kalas. What about Mr. Haitham?
Yeah, it's clear.
Good, great. So we will move on. So we have prudence and we talked about measurement uncertainty. And then we also talked about substance over form. Correct?
Correct.
Fine. Now, elements of financial statements. We discussed about it. Assets, and then we talked about liability, and we talked about equity. Assets equal to equity plus liability. And we define
Liability.
what is an asset. We also define what is a liability, and we also went on to define what is an equity. You remember this discussion?
Yes. The equation, yeah.
Good. So, and then we also discussed income and expense. Correct?
Yeah.
Fine. Recognition criteria. We discussed these two
Yeah.
terms in a
Covered, yes.
different point of view. Relevance, whether recognition of an item results in relevant information may be affected by, for example, low probability of a flow of economic benefits, existence, uncertainty. What I'm trying to mean here, what I want to say, what I want to convey is that before you recognize any of the assets, liability, income or equity or expense, you got to ensure you are recognizing the relevant financial categories.
Clear.
Okay?
Yeah.
And we also need to address whether when recognizing these financial categories, what is the level of probability of flowing the economic benefits towards the entity? And furthermore, to what extent this is certain or level of uncertainty needed to be verified before we really recognize that as one of the financial category in our books. Now, also faithful representation. Whether recognition of an item results in a faithful representation may be affected by the following items. The measurement uncertainty. Now, there is something called gray area. Do you know about gray area?
Yeah. If any wrong area.
Yeah, it is not the black or it's not white. It's in between. So when we talking about the faithful representation, we got to see to what extent it is certain. So that needed to be evaluated. And recognition inconsistency. One is uncertainty, other one is, what do you mean by inconsistency? Let's say 2021, 2022. And in 2021,
There is some difference.
Pardon, sir?
Is there any difference like in any ledger? So we can say there is no inconsistency.
Having a difference in ledger is one thing. We talking about the difference in the way we practice. Now, suppose you recognize the revenue.
Okay.
Let's say you are recognizing revenue. In 2021, what you have done, you worked based on hours spent. Let's say you are an audit firm. You are billing the client based on the number of hours the professional team is working. This is one method of recognizing. In 2022, what you have done, hours, the payment received. What happens is when customer is paying you, you calculate for how many hours the customer paying. Accordingly, you recognize the revenue. So these two methods, is it consistent?
No.
This is not at all consistent. So this is not acceptable. Presentation.
Follow one rule, and second year we follow the second different procedure.
You cannot. You had to. Now, let's say in a school, grade 7 children wearing one color uniform and grade 8 children wearing a different color uniform. Allowed?
No.
It will not be allowed, right? Same story here. So, presentation and disclosure of resulting income, expenses, and changes in equity. So, all these, it should reflect in all of these places. You got to ensure that your presentation have sufficient disclosure of information, and that will have impact to income, expenses, and changes in equity. Clear? Yes or no? Clear? Is it clear? Is it understood?
Yeah.
Great. Now, we also need to discuss a bit about cost constraint. And I believe all of you know the meaning of the word constraint.
Yeah. Cost constraint.
Here,
Any consistency of the cost?
no, constraint means limitation.
Limitation.
So,
Okay.
you see, the entities or the companies, the available cost is not necessarily enough to spend freely, correct? So then when for the financial reporting to have a very steep 1 second, be on line, please. Yeah. So when producing and presenting a financial statement, what happens really? We encounter cost implications. Now, if you see here, now we talk about faithful representation and then relevance. In order to ensure to recognize our financial categories in the financial statement and to ensure smooth, relevant, and faithful representation, we also need to factor about the amount of cost that we might incur in order to streamline the financial reporting. Is that clear?
Yes, clear.
Great. So we move on. When you talk about measurement, there are two methods. One is historical cost measurement basis and the current value measurement basis. Now, look into this. Property, plant, and equipment. Now, let me say motor vehicle. The motor vehicle, the cost, or meaning the purchase price, is 1,000. The purchase price 1,000 and accumulated depreciation so far 400, and accordingly my net book value is 600. If you tend to take this value to the books, this we call it historical cost method. This purchase could have taken place maybe 2 years before. for example. And at that time, you pay to one supplier $1,000 or reals. So you are recording the transaction at the historical purchase price. And that method is known as historical cost measurement. And this will also include amortized cost. What do you mean by amortized cost? Later we will discuss financial instruments. In that we will also talk about how we value the liabilities.
Amortization by some
Prepaid.
provision
Amortization
or
by?
something we amortize
Prepaid.
future or past.
Please repeat, sir. One of them.
Amortization means if we amortize any of the provision or if we did provision in the past and
That is one side. What you are trying to say amortization, the word amortization alone could mean that depreciate the
Cost.
intangible asset.
yeah,
Or prepaid okay, intangible asset.
This is the meaning of the word amortization. But what we are talking is different. We are discussing something called amortized cost. Am I right? Is that what they are saying?
yeah.
Amortized cost. So what is amortized cost? If you happen to value your liability, let's say I have bank loan. This bank loan, I have time of 10 years. 10 years period. The bank loan, 10 years period. Now, I need to show this value in my financial statement as to, let's say I am today 2022 December 31st. I need to show this as a liability in my books. In order to arrive a value, what we do is that we incorporate something called DCF, discounted cash flow method technique to arrive the value. This exercise is known as amortized cost. Understood? Mr. Item?
Yes, with you.
Yeah. You understood what I was saying?
Well, it's not that clear, but I can say 50% of it. I have
Okay, can I repeat then?
Yeah.
Fine. Let's say you have a loan. You have taken a loan from the bank. The book value of the loan $10 million. Okay?
Okay.
You need to settle this loan in 10 years' time. Clear?
Clear.
So that means you need to pay loan in installments. Correct?
Correct.
Let's say you are paying in 10 installments. 1, 2, 3, 4, 5, 6, 7, 8, 9 and 10. So you have the cash flow. Clear?
Yes, yes, clear.
Now, if I ask you a question, do you think, let's say every year equal installment, let me assume every year they are repaying 800,000. So in the face value, how much you think on the year 10, how much they are paying on the face value? Year 1 they are paying 800,000, and I also told you every year equal installment. So
So it's
what
gonna
do
be
you
the
think?
same.
How much they are paying?
The same.
How much? Same.
Which is
So that is
800K, yeah.
800K. Now, but what you think the intrinsic value of this? Is it really 800,000 as of today?
Sorry.
After 10 years, you needed to pay 800,000. But if you really work out the value as of now, meaning year 0,
Okay.
on this date, what do you think the value of this 800,000? Is it 800 or more or less?
It will start from the first month, year. So it's gonna be 0, nothing to be paid. So you,
No, I didn't get you.
sorry?
I didn't understand what you're saying.
You didn't understand. I said the at the end of the first year, you will pay,
Yeah.
the installment, first installment, which is
At the beginning, actually at the beginning of the first year. So
at the
we
beginning
are
of the
actually
first.
here now. We are here now.
Okay.
But on 1 January, let's say 2015, for some example, I got this loan, 10 million. So cash flow, I am receiving 10 million on this date. Correct?
Correct. Yeah.
Now the agreement between the bank is what? Every end of every year, you should be settling 800,000.
Clear.
Correct?
Yes.
Now, end of first year, 31st December 2015, you will pay 800. And 31st December 2016, 31st December 2015, you need to pay 800. And 31st December 2016 also, you need to pay 800. If I ask you a question, the amount of items that you can buy for 800,000 on this date, is it the same you can buy at the 2016 with the 800,000?
Yeah, it is.
Huh? Can
Well,
you?
I mean, yes. Wait.
Now, if I will repeat
No,
the statement.
no.
I mean, if
I will
there's
repeat the
difference.
statement again.
Okay.
I have 800,000 in my hand on 31st December 2015. Okay? And I go to a mall. Mr. Haitam.
Yeah, I'm with you.
Yeah. I go to a mall and I buy all items for 800,000. Which date?
End of
This date.
2015. Yeah.
2015. Now,
Yes.
I wait for 12 months. Again, I go to that mall and I have 800,000. Now I want to buy items for 800,000 on the same mall after 12 months. You think that I can buy the same amount of items?
No.
No.
Very clear now.
Obviously
No.
not.
Yes.
The quantity of item that I can buy in 2016 will be much less.
Correct. Yeah.
This is because there's one concept we call
Time value
Time
of money.
value of money. Also you probably have discussed or come across something called inflation.
Yeah, clear.
So now coming to this situation, now tell me, Mr. Item, the 800,000 we may have to pay on year 10. If you think what will be the value equivalent as of now? Equivalent value of that 800,000 immediately now, meaning year 0. Year 0 is actually now. Is bigger than 800 or lesser than 800? What do you think?
Ideally, less of 800.
Okay, I will explain you another concept here. You please pardon me to discuss little bit mathematics in order for you to make understand this concept. Can I do that?
Yeah, go ahead.
I understand.
Okay. I believe Mr. Subair understood. Anyway, please look into this. Please look into this. Let's say I have $1,000 in my hand. I deposit this into a bank at an interest rate of 8%. And I keep this deposit for 3 years. And we do this on a compounding interest method. There are two interest methods. One is simple interest, other one is compound interest. I'm not going to discuss simple interest. So then question is, how much money you will receive at the end of the 3rd year with an interest rate of 8% for the capital of 1,000. There's one equation for this, P into 1 plus R over 100 to the power N. If we apply this, 1,000 into 1 plus 8 over 100 to the power 3, meaning 1,000 into 1.08 to the power 3. Can you solve this? (1.08) to the power 3 is this into 1,000. How much you get?
1,290.
1,260.
Okay.
So you see, if you invest today $1,000 and you wait for 3 years, and at the interest rate of 8%, at the end of the 3rd year, how much money you going to get?
More. Okay.
Meaning 1,260, right?
260.
Yes.
Increase.
Now let me reverse the
Increase.
question. Yes, let me reverse the question. You receive 1,260 at the end of the 3 years at the interest rate of 8%. How much you need to invest? Same equation. A is equal to B into 1 plus R over 100 to the power N. So A we know how much. Whereas P we don't know. So now what you do? 1,260 is equal to P into 1.08 to the power 3. Now we move this to this side. If you do that, P is equal to 1,260 divided by 1.08 to the power 3. Can we try this?
1,000.
How much you get?
1,000.
Yeah.
1,000. Answer is
1,000.
You see, now I will relate this statement with this calculation. After 10 years, I am going to receive 800. How much I should deposit at year 0? Will be bigger than this or smaller than this? If you look into this, you should understand that. After 3 years, I am receiving 1,260, but I am investing only 1,000 now. Meaning, now the value now is less value than the value in some years later. Correct?
Okay.
Mr. Haitham, you are following?
Yeah, I'm with you. Yes, I'm following.
Correct. So that means when I will have to pay 800,000 year 10, meaning that is equivalent to a value now will be much less than 800,000.
Yes.
So
Time value of money.
this mechanism is because of something called, I have written somewhere. Where I written that? Yes,
Time value of money.
because of time value of money. And also we call this discounting factor, DCF.
Value of money.
Yeah, we arrive discounting factor because of time value of money. Clear?
Clear, yeah.
Clear.
Yeah. So
Same like if
here,
we discount the LC.
see, here, actually, this exercise is not an job of an accountant. This exercise will be done by some mathematic people who will help you arrive what is the amortized cost of your loan. You know, if you really watch here, see, I will have a very less value for year 10, year 9, year 7, year 8, year 7, year 6. So the value is keep going down. Understood?
Yeah,
Yeah,
understood.
clear,
And
clear now.
EMI
the
or
total
like
of all this, pardon?
EMI, the same calculation EMI which the people are doing.
Actually, equal monthly installment, similar to this.
Yeah.
And the total of this calculation will come one number, and that number will be your liability according to IFRS 9. That we will discuss later. And this exercise or this method is what we refer here amortized cost.
Okay. IFRS
I
9
hope.
is amortization.
Yeah, we will go there and we will discuss in detail. But I just give you a flavor.
Overview, yani we discuss only overview.
Exactly. So then we also do have current value measurement basis, meaning you ignore the historical cost. You look for the current value. We will use fair value, we will use value in use, and we will also use fulfillment value and current cost. We have four terms. What is fair value? What is fair value?
It's the market price, or the current price.
One simple answer, actually market price.
Yeah.
But we could elaborate a little more. But one simple answer is market value. Let's say you have a car. This is my Ferrari, and I want to sell this. And this is me. I have two potential buyers. He is my brother, my own brother, and he is a stranger. Now, both of them are interested in buying my car. What could you, how do you interpret to know what is fair value is the value that you will agree with your brother will be a market value.
Can you
What do you
repeat
think?
that? I couldn't hear you.
What I'm saying,
Mhm.
you see, you have a Ferrari, I have a Ferrari car, and I want to sell this car.
Sell it. Okay.
I have two potential buyers. One is my own brother, one is a stranger. So the price that I will agree with my brother, will that be a market value?
No, it's not the market value.
Pardon?
It's not the market value. Market value
It will not be market value.
value. Yeah.
Whereas the value that you're going to negotiate with this stranger will be,
The market value. Yes.
you see here, I will now write for something. Fair value is a price arrived between knowledgeable billing parties at arm's length transactions. Do you understand it? What we say here? Some key terms here. One is knowledgeable. Now you see, regarding this car, the buyer and the seller both should have good knowledge. The buyer and the seller both should have
Good knowledge.
good knowledge. So that's what I mean. Example, what about engine? Whether there is an accident, is Timara is good, chassis is good, and so on. If the body is touched up with paint or any illegal matters happen like that, both the parties must know all information. Okay.
Okay.
Yeah.
Secondly, willing parties, meaning no one is under any compulsion. No one is under any compulsion. You are not coming with the .7 gun and keeping on my forehead and then telling me you must buy. If not, I will kill you. So it should be knowledgeable, willing parties. Now, what is arm's length? Also, I have written something called arm's length. What do you think arm's length is?
Arm's length.
Now, if I ask you a very funny question, you walk on the road, okay, on Riyadh town, you walk on the road, can you hug Anyone who is walking on the road?
No.
What will happen if you do that?
Shurta will caught.
Huh? Surta or what you call it, Askari. Askari will come and catch you.
Yeah.
But in our day-to-day life, there are certain members whom we can entertain beyond the arm's length. So what I mean arm's length is this distance. So if you allow someone here, meaning that someone must be very close with you. Am I right?
Yeah, clear.
So but I try to mean to say that arm's length, you agree a price with someone who is not necessarily that much biased with you. He is not relative. He is not close friend. He is not your girlfriend or boyfriend, or he is not your husband or wife. He is not your father or your mother, or he is not your son or daughter. They are just outsiders. They are market participants in an active market. And a price that is openly available in the market, that's what the term fair value means. Mr. Haitam?
No.
Very clear, very clear.
Pahamtu?
Good,
Pahamtu?
good example. Yes, of course I will
Yes.
understand it.
So, you see, the concept is always we need to remember these theories. Problem with remembering theory, if we just talk about the theory only, many don't understand and remember. Whereas if you go with some, maybe it may not be a realistic example, but if we give with some example, that will help us understand and remember in our throughout our life.
Yes,
Is that clear?
right. Yeah.
So now we understood fair value. Now we need to talk about value in use. Remember, these terms will repeat time to time. Huh?
Sure.
Now we need to discuss second term is value in use.
Value in use.
Let's say I have one machine. Okay, I purchased this machine on 1 January 2017. Today, 31st December 2023. This machine life is 10 years. How many years so far finished? Hmm?
You said 10 years. What is?
Life of the asset is 10 years.
Okay.
But from 1 January 17 to 31st December 23, how many
6
years
years.
we finished? 17,
6
18,
years.
19, 20, 21, 22 and 23. 7 years.
6 years. Oh, 7
No,
years.
Habibi.
Oh, yeah, sorry, I didn't.
Sabahat. Sabah Sanawat.
Yeah, okay.
So, now remaining how many years now?
3 years, okay.
2 years and some months.
No, 3 years. How come some months? I don't understand that.
Because 30. Okay. First is okay.
1st of January 2017, 31st December 2023, complete 7 years over.
Yeah.
So 31st December 24, 25, 26. This is the remaining.
3 years.
Now, the concept of value in use, what they are trying to say that during this 3-year period, during the remaining life of the
Asset.
assets, the amount of income the asset could generate as a result of usage of the asset. As a result of usage of the asset. This is what exactly mean by value in use. You understood this or not? See, in these 3 years, you have that machine. How much additional income you can generate by continuously using that machine? Clear?
Yeah.
Clear, yes.
So this concept or this method is known as arriving value using value in use. Again, brothers, please remember we need to do the discounting factor also. So I am now today 31st December 2023. So meaning now. Now meaning year 0. 31st December 24, year 1. 31st December 25, year 2. 31st December 26, year 3. So now we need to figure out the cash flow. What are the cash flow that the machine will bring during these 3 years because of the usage? Now I will have to find out the cash flow and then we need to do the discounting factor and then we will arrive the answer, and what we do, we take the total of all this, and that answer is value in use. Understood?
Yeah, understood. But once we
Yeah,
have
but
some
what?
figure and practical, when will be any if we apply some figure?
See, actually, actually, this topic will repeat in a different standard.
Oh, okay, fine.
That's why, and also it is bit too much for me to come up with calculations and numbers at this point.
Yeah, I got it.
Since I have the terms here, I don't want to just pass. I want to give a grip. That's exactly what I am doing.
Okay, got it.
Fine?
Yeah.
Mr. Haitham, you understood?
Yeah. Yes, got it.
Fine. We'll take a break and we will continue.
Okay.
Okay, sure. Thank you.
Hello? Hello?
Hello.
Yeah.
Yes, sir. Sorry, I'm taking my dinner as well and class.
You are, dual balancing.
Dual work.
There's a funny story about this double entry principle.
Yeah.
All of us know Newton, right?
Yeah, Newton. I know.
Yes.
Newton
yes.
came up with three laws. The third law is every action has
Reaction.
an equal and opposite reaction. Do you think who came up with the double entry rules?
No.
There's a guy called Luca Pacioli.
Mm-hmm.
He said every transaction has twofold effect.
Every transaction has twofold effect.
Twofold effect. Giving and receiving. Can you relate these two concepts? Every action has an equal and opposite reaction, and every transaction has twofold effect. Giving and receiving, same thing. Now if you slap someone, according to Newton's third law, if you slap someone, the amount of pain the man who you slapped and the whatever the pain he will feel will be equal to the pain in your hand. Correct,
Yeah.
isn't it?
But there will be an action and the reaction. He will slap back.
Yeah. Yeah, it will be equal. Every action has an equal and opposite reaction. Do you think? Can you resemble this? Now, this double entry principle also same like that.
Yeah.
Every transaction has twofold effect: giving and receiving effect. Got it? So the story is that we in all of my lectures I used to say that Luca Pacioli and Isaac Newton are cousin brothers. They came up with the same principle in two different magnitudes. Anyhow, yeah. Now we talked about value in use. We need to discuss fulfillment value. Now we need to talk about fulfillment value. This is actually actually we rarely use this term. We discussed here value in use. in a different magnitude, we use this term, but the same meaning though. What we saying that, if you understand the same example I brought, 7 years and 3 years. What would be the value you would be generating? What would be the value you would be generating
Yeah.
See, now we discussed value in use. This term is interchangeably used for value in use. What we try to say here, we mean that how to fulfill the complete life of the asset. Now the complete life of the asset, how many years? 10 years.
10
We
years.
already completed how many years?
7.
7 years. What would be the additional value we would generate in fulfilling the total number of years? The value that can be generated in fulfilling the total number of years related to the assets. Understood? Is that clear? And this term is very rarely used. Huh?
Fulfillment value.
Fulfillment value. And finally, we have current cost. What is current cost actually? Let's say I purchased one asset on 2015. The cost of that asset is $60,000. Life 20 years. Today I am on 31st December 2023. I need to find out the current cost, meaning if I to purchase an asset today with this much age. Do you see what I trying to mean? How many years finished? 15, 16, 17, 18, 19, 20, 21, 22, 23.
9 years.
9 years over. Now, if I had to buy a similar asset with 9 years age in the market, how much I should pay? And that is what the current cost is. Please don't confuse this with saying that the brand new price. Huh? This is not the brand new price. Clear?
Yeah.
Good. Selecting a measurement basis. Now, when selecting a measurement, we have different measurement here. Fair value, for historical cost, historical cost measurement, we have one, and then current value, we have fair value, Value in use, fulfillment value, or current cost. So in doing the selection, we have to pay attention for our concept of relevance and faithful representation. What are the characteristics of the asset or liability? What are the nature? Based on the nature, the way you do the valuation or way you do the measurement will change. And contribution of to future cash flows. Now, for example, that table or that machine, this machine, how much this will bring cash flow in the future period? Can we figure it out? Measurement of inconsistency, any wrong, what we call incorrect practice, or is there any uncertainty belong this? We got to see all this in deciding a measurement basis. Hope I made you all clear.
Yeah.
Good. Now we move on. Information in both the statement of financial position and the statement of financial performance should be measured and recognized. And then we also need to have a concern on enhancing qualitative characteristics. That is comparability, timeliness, and we also discussed those four different enhancing qualitative characteristics. With this, so we have the profit and loss, primary source of information about performance. That is, you will get what are the. Now we discussed about this. I hope you remember. I told you that a P&L,
Yes, yes.
statement of P&L will have profit and loss and will have other comprehensive income.
Okay.
Default location for income and expense. That's where you will show your income and expense. What is other comprehensive income? Exceptional circumstances. Only changes in current value of assets and liabilities. Example here. Revaluation. In principle, other comprehensive income items are recycled, obviously. It will be recycled. See, 1 year you have a revaluation surplus, another year you may have a revaluation deficit. This both could be offset. So that's what they mean, recycle. Again, how you decide whether to have it on the profit and loss or on the other comprehensive income based on the relevance and faithful representation. However, finally, the board can take the final decision on what are the items of other comprehensive income and how we can recycle. With this, we are done with the chapter 1. Any question before I move on to practice of some questions?
Nothing
Any
from my
question?
side. No, nothing from my side.
Okay, can we try some questions?
Okay.
Okay, I will share this in the group.
Yeah.
Then
Generally accepting accounting principle.
What is the primary purpose of
Option number B for question number
option
1.
number B? B means ball or D means doll?
B.
B from boy.
To provide information about an entity
Okay.
financial
Okay.
performance.
Okay. So option number B. Both of you agree?
Yeah, for question number 2, answer
Yes,
is
yes.
B.
A.
Financial reporting standards.
Which of the
International
following
financial
is widely used? International Financial Reporting
financial reporting
Framework.
standard. Yeah.
This is how the questions you will see in your diploma in certificate in IFRS.
Okay.
Yeah.
The context of financial reporting, what does GAP stand for?
Question number 3, answer is
B.
B. Generally accepting accounting principles.
Generally accepted accounting principles. And
Or
question
balance
number
sheet.
4.
Balance sheet.
Which
C.
financial statement provide a snapshot of company performance specific cash flow
Balance sheet.
statement change.
And the new
C.
name?
Statement of
Statement
financial position.
Yeah. Financial position.
Okay, next question.
Which are the revenue and expense recognized in the accrual basis accounting when cash is received and paid? Income only when they are paid in cash at the end of the D. For question number 5, answer is D.
Pardon?
Question number 5. D
Question
answer.
number 5.
D answer.
B is the answer.
Yes.
D.
B or D?
D.
This one?
Yeah. At
Mr. Haitam?
when they are incurred or earned regarding of what the cash is received or paid.
When they are incurred.
Yeah. Sorry, B.
Oh, B, not D.
So
Yeah.
I will penalize you 20 riyal.
Okay.
Okay. Question number 6.
Principal asset and liability should be initially recorded at their cost. Going concern principle. 6.
Which accounting principle states that assets and liabilities should be initially recorded at
Their cost.
the cost? What do you think?
Going concern.
I agree. I think going concern.
Going concern?
Yeah.
But the question is what they are saying.
Actually, matching principle revenue recognition, I think. Sorry.
No, brothers.
Mm.
I will look into this. Did we discuss about this or not?
Yeah. But we have
Yeah.
And
discussed
then
it
what we said
only
that?
and liabilities only.
Yeah,
SRO.
both assets and liabilities. If when come to assets, historical cost means the original cost, isn't it?
Yeah.
Yes.
So if it is original cost, then what is the answer?
Revenue recognition.
Habibi,
Oh, C. Yeah, okay. Historical cost.
recorded at their cost. Cost, always remember. Please remember, when they say recorded at their cost, that they are referring to
Historical. Okay.
meaning historical cost principle.
Okay.
Next.
C.
Yes, Mr. Zubair, right?
Yeah.
So what do you think?
What is the
C.
purpose of the statement of cash flow? To show changes in equity, to report company financial position to a specific date, receipt and cash payment in a specific date. Yeah, this I think C. C. Which organizations for developing and issuing international financial reporting standard?
B.
IASB.
I?
IASB. B. Option B. Option B.
Yes, that's correct.
What is the purpose of audit in the context of financial reporting? To prepare financial statement to determine tax note. The first one, to prepare financial statement.
I will kill you.
What is the purpose of audit? Okay, of an audit to context financial reporting.
We discussed about who is responsible for preparing and presenting financial statement.
Yeah. Provide assurance reliability of the financial information. Yeah, B one, B. B, sure.
Okay.
Which is the financial framework is commonly used in United States? Yeah, GAAP.
Yeah.
GAAP.
Khalas. So all of you got 10 out of 10.
I
That's
think
on the
one answer was wrong. 9 is
Yeah,
right.
one answer was wrong and then we discussed.
Yeah.
But otherwise, Alhamdulillah. So this is actually, please also don't what they call develop an overconfidence. And at exam, questions will be even tougher. I will give exam questions after completing our discussion. Okay, but this is just a type of question that could be come in your exam.
and
All right.
similar.
So with
Similar
this
to
we
the-
have done with. Now we'll go back to our syllabus.
It's similar to the CMA exams.
Yes.
First.
CMA multiple choice question also another word.
Yeah. Well, I mean, if we'll talk about the first unit, it's similar.
Yes. So we have done with this. And now we need to continue.
Yeah.
I deliberately today chose now this topic. I ignored it with the reason why since we studied the framework, it is now our mind is fresh. So better we discuss IAS 1 and then come back to the second, the global convergence and so on. Okay?
Yeah. Yeah.
So we will move on to that. IAS 1, presentation of financial statements. So now this is the very first accounting standard and one of the oldest standard, and this is very important to have a good understanding as to how you will present your financial statement. I will share this. Bear with me for a few moments.
Yeah, sure.
I'm sharing this note and then we will continue with this. Yeah, I shared the note. In discussing this, I would like to open one financial statement. See, what they are saying is the guideline with regard to presenting financial statement. You will find where? You will find in where will you find this?
IS 1.
IAS 1.
Yeah.
This talks about lot of things. It should say that every statement should have their name. Now, if you see this here, now I have one name here. Do you see that?
Sort of financial position.
Yes. So this particular document we are showing below this name is all about financial position. And also we have here the date. And also we have here the name of the entity.
Hmm.
So that description is mandatory as per IAS 1.
Okay.
Secondly, should describe accounting policies of the company. It should describe what? It should describe the accounting policies of the company. If you see here, you go down and you further go down. You see here,
Yeah, general policies.
and then this goes on to talk about all the policies, all the policies, all the policies. Understand me?
Yeah.
So this
Yes, yes,
this will
yes.
keep on describe the related policies. Okay?
Yeah.
This will also need to explain the currency that we are working on. See here. We mention what is the currency in which we are presenting our information.
Hmm.
Understand me?
Yeah.
And furthermore, they also say that do you know what the meaning of this?
Presentation.
Level
Precision.
of precision.
Okay. Level of precision.
Any idea?
Yeah.
Yeah, what is that idea? Hmm?
Level of
What
precision.
is level of precision?
I don't know.
Okay. And I'm sure you have seen this in your
Yeah, I see, but
different financial. Pardon? What is level of precision?
I
Lost
don't
his
know.
voice.
Mr. Haitam?
Well, I have no clue, honestly.
Okay. I'm sure you will have come across this. Now, see this here, they have written QR and QR only, right?
Yeah.
Yes.
And when you read this number here, 22,812,
12, okay.
this 22,812
Hmm.
Qatari riyal, am I right?
Yeah.
Yeah.
If I write like this, for example,
Million.
and then I write here 5.8.
5 million.
What do you mean by this?
5
5.8
million
million.
800.
5.8 million. And have you seen people writing like this?
Yeah.
No. From my side.
Yeah. I see some of financial.
Yes. So this 1,200 means 1.2 million. Yes or no?
Yeah.
What is the meaning of these three zeros? The actual
1,000.
number was like this.
Yeah.
But then they remove these 3 zeros and they have summarized here. And that is exactly what I mean level of precision.
Clear, yeah.
Okay.
It could be, if you could report that in dollars, thousand, million.
Mm.
Well, I usually see it in
Understood?
letters, not in.
Pardon?
I said I usually see it in letters, you know, which is MN,
Yes,
for example. Yeah.
exactly. But
Okay.
some financials also we are seeing this.
Yeah.
Yeah, I saw if we in construction, if they have a billions of
Hmm.
transactions, so they
Yeah, then
remove.
you see, here 22,812 is just Qatari riyal or Saudi riyal or dollar.
Mm.
But if I had to have here 225,835,485, it's a very big number.
Yeah.
In order to bring a ease, a convenience, what we do is we change the level of precision. Understand me?
Yeah. Clear.
Also, they report the functional currency. They should say in which currency the financial statement is prepared. So here it should be mentioning that the financial statements are produced in which currency. Is dollars or reals or
Yeah.
Qatari reals,
Yeah.
whatever.
Materials.
Furthermore, financial statement comprise of 5 components.
Components.
Which
Yeah.
are
Clear. Clear. Yeah.
statement of
Financial position.
financial position,
Handle.
statement of profit and loss account, statement of changes in
Equity.
Iniquity.
equity, statement of cash flow, and
And notes.
notes. So these 5 items you have to present. Here if you see, I have statement of financial position, I have here, and then I have statement of comprehensive income, I have here, and then I have here statement of changes in equity, and then I have here statement of cash flows, and also I have notes.
Notes.
Got it?
Yeah.
Further they say that certain financial information should be presented in the face of the statement, while few others as a note. Do you understand what I want to say?
Yeah.
Now, for example,
Qualified or not qualified.
no.
Depreciation.
Different.
Here you see sales. How much I'm showing?
742K.
742,900, correct?
Yes.
Yes or no?
Yeah.
Yes.
But do I have any notes here?
No.
I don't have no meaning. I am just showing the sales information in the face of income statement. Understand me?
Yeah.
Whereas, what about this?
9. Note number 9.
Note number 9.
This I am showing as detailed information in a different page as a note. See, I have all this. So IAS 1 says, when you can present only in the face of the financial statement, or then you present accordingly. If not, you present as a note to the financial statement. Clear?
Yes.
So these are some of the methods. Anyway, we'll go to the slide
Is it
now.
optional or it's a must? Sometimes that we have to.
Pardon?
For example, it's not an option. It's a must. But I'm talking about the revenue for this case. We
Yes.
usually there is a breakdown for the revenue. No,
it's an option actually.
or-
It's not a mandatory requirement.
Yeah.
Sometimes what could happen, you may have revenue from different branches.
Yes.
So you may have revenue from different branches. So in that situation, you cannot put only that let's say 5 branch.
So
the
let's say,
total of 5 branch, you cannot write it down there. So for example, branch 1, branch 2, like that, you cannot write. So then you have to go for notes. But otherwise, you can present as
but we
it
know
is.
there are mandatory let's say notes, which is, for example, related to depreciation, for example, or
Yes.
others. So but the others, such as the revenue, it's optional. Depend on
Correct.
the use or the necessity of the information that you will present.
Let me open the financial statement. So here, if I understand better what you are saying, see, this is your note for property, plant and equipment.
Yes.
And this line is
depreciation for the year.
So this line is depreciation for the year, but in this company they don't have depreciation. But if they will have depreciation, you have to take the total here, isn't it? So then they will take the total there. And that total they will present where? They will present as one line item here, isn't it? As depreciation expense.
Yes, 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 yeah.
So it's a matter of an optional situation. It's a matter of an optional situation. It's a matter of an optional situation where, based on the company to company, either to present in the face or as a note. Mr. Haitham, you getting my point now?
I got your point, but you know, you want to actually repeat the information. There are, you know, standards that you have to actually present it in the financial or in the notes. So, for example, the receivable and or the aging of the receivable. So,
Pardon,
you have an option. Yeah, I hope my
pardon?
voice is clear. For example, the receivable, it's just a mandatory. You know, you have to make it, you know, more comprehensive. You know, that you have to present, you know, the receivable or breakdown of the receivable. But
So, you know, there is something called loan loss provision. Same like that for receivable, we need to work out the provision for receivable.
mhm,
What I understand from you, what you are telling me now, let's say receivable schedule.
okay,
I have 10 customers. So 5 customers. This is what I wanted to show in under current assets. I
mhm.
will not going to show
All the
each and
customers.
every individual customer in my financial statement. Yes or no?
Yes, yes,
Yeah.
you're right. You will show the
Okay.
significant amounts, for example, that certain limits.
Uh,
Not the total. No,
uh,
it's only total need
no,
to show there, and it will be down in the note.
if I'm not mistaken, in the financial
Mhm.
statement, we are not going to talk about the customers.
Yeah.
Oh, okay.
Only receivable. There will be only one.
Unless we have only one customer, and that customer is a very significant and sizable customer. Then
Yes.
in your under current assets, you could show that receivable from CCU example. So this
I see.
CCU becomes one significant customer for you. Or
Yeah.
sometimes what happens, you show as trade receivables and also you show as other receivables. And then you have a note here, note number 5, example. Now you go to note number 5, then you have international trading company, Karim Travels, like that, you will have the total, and this total, we will bring it here. This is what Mr. Aitam wanted to tell me?
Yes, yes, yes. Correct.
What about Mr. Zubair? You also understood?
Yeah. Yeah. Understood.
Good. So now, in receivable, the new rule, anyway, again, the new rule is not nothing to do with IAS 1. That is when we discuss what you call IFRS 9, we will talk about it. Even for receivable, there is something called allowances for receivable or provision for doubtful debt. The calculation of
IFRS 9
provision
is
for
for
doubtful
what?
debt. Pardon?
IFRS 9 for what?
No, when the under IFRS 9, we will be working out the provisions.
Okay.
So receivable will have different provisions. So and that provision will what I want to say, that provision, there is a method of calculation. The new requirement has come under the IFRS 9, which we will discuss when we go to IFRS 9. Currently, I have the total receivable, and then we will work out the receivable allowances for receivable of doubtful debts. Now, what is the schedule we use? Auditors asking what schedule they are. You remember something called they are asking aging report?
Yeah.
Yeah, yes.
If it is
So they ask aging report.
more than a year, they will make
Correct.
some provision.
30 days, 60 days, 90 days, 6 months, 1 year, 2 year, 3 year, like that you categorize. And then what you do? You make provision.
Doubtful debt.
Correct.
Yeah.
You make doubtful debt. So is that clear, both of you?
Yeah, that's clear.
Yeah.
Good. So an entity shall apply this standard in preparing and presenting general purpose financial statement. That's very important. Why we say general purpose financial statement?
All purpose or comprehensive.
See, if you look into industries, you may have insurance industry, you may have finance industry, you may have hospitality industry, you may have healthcare industry. So industries are differing case to case basis. So if you have to prepare financials for different industries, then what will happen to the life of accountants? It will be difficult, right?
Yes.
So IH1 tells you it's a very general. You just follow the prepare. Sorry.
Yeah, which means apply to all industries.
Correct. In other words, I would say average financial statement.
Yeah.
That will applicable to all the different industries. Financial statements in accordance with International Financial Reporting Standards and International Accounting Standards. And IH1 does not apply to interim financial statement. We will study under another standard, IAS 34. Consolidated financial statement, it is not coming under IAS1, it is coming under IFRS 3 plus IFRS 10. So these two.
Both.
Pardon?
Both standard, IFRS 3 and 10.
Yeah, both are consolidated financial statements.
Okay.
So, now what is this general purpose financial statement? Financial statements are those intended to meet the needs of users who are not in a position to require an entity to prepare reports tailored to their information needs. Understood? Tailored to their information needs. If you happen to prepare financial statement in a common basis, that is
in-house.
Yeah. Not only in-house, even the auditors will use this.
Okay.
International financial reporting standards are standards and interpretations adopted by International Accounting Standard Board.
Yeah.
Now, what we say in that, when you prepare a financial statement, one of the requirements of IAS 1 is to say that you should comply with prevailing IFRS. You should comply with what? Prevailing IFRS. That is to confirm that IFRS are the standards and interpretations adopted and introduced by Accounting Standard Board.
Standard board.
Yes. They comprise International Financial Reporting Standards. They also comprise International Accounting Standards.
Standards.
Yesterday, I think we discussed IAS. There are 41 IAS and IFRS up to 16.
Yeah.
And
Yes,
also IFRS. Purpose of financial statement. What is the purpose? Why we prepare a financial statement? To provide financial information about the financial position, financial performance, and cash flows of an entity that is useful to a wide range of users. Yesterday we discussed all the users. Remember?
Yeah.
And we
yes.
we talked about objective of financial statement. Objective and purpose almost the same. To provide financial information about the financial position, financial performance, and cash flows of an entity that is useful to a wide range of users in making economic decisions. And these are elements
Of the financial
statement. We discussed about this. Assets, liabilities, equity, income, expenses, contributions by and distribution to owners. Actually, this is dividend and extra capital. If the owners contribute further, that becomes additional capital. And if you distribute to owners, that becomes dividends. And then cash flow. These all of these, you will present in the financial statement. Understand me?
Yeah.
Yes.
So financial statement comprise of, we have discussed this, financial position, comprehensive income, changes in equity, cash flow, and notes. How many items? 1, 2, 3, 4, and 5. What are the general features? A financial statement should be prepared in a fair presentation manner and compliance with IFRS. And it should fulfill going concern. It should follow accrual basis of accounting. And it also talk about materiality and aggregation. What is materiality and aggregation? See, which number is important for you?
5,000.
5,000. Okay. Now, tell me which number is important for you.
5 billion.
No. See, I'm talking about these two numbers.
5 by 6.
So 5 out of 6 is important, or 5,000 out of this big number is important?
5 by 6.
So this is important, right? So what I wanted to talk about, materiality is a relative measure.
Mm.
And we will have to emphasize the materiality when producing our financial statements. And with this discussion, I will continue with in our next class.
Mm.
Jean, you also is there, right? You are hearing me? Jean, are you there? I wanted to request an excuse. Tomorrow I have a medical appointment.
Mhm.
So, just a minute. I have to stop the class tomorrow at 8 p.m.
From 6 to 8.
6:30 to 8.
Okay.
Okay.
That is one thing. And Friday we will not have any class
Mhm. Okay.
Fine.
because you know it's
Friday,
a
Saturday we are off. No issue. You
family
can
day.
leave anytime.
So Saturday we will
Overnight,
have
no
class,
issue.
but Friday we will not have a lecture.
Okay.
So it will
Okay, Mr.
extend
Haitham,
to.
it's okay for you?
Yes, okay. So yeah, of course,
No
okay,
issue.
yeah,
No
because
issue.
I
No issue for
I
us.
was, no issues, yeah, and Friday is
Okay,
quite busy
so
day, so
I
for
will
all of us.
meet you all tomorrow 6:30, but I will be stopping at 8 p.m. because I have an appointment with the clinic at 8:30.
Mhm.
So I need to
Sure.
leave. And then
Okay.
Friday, uh, this is what I want to say. With
But
that note,
yeah, but you know, the important thing is that to give us the new schedule for the program so that you know we can manage it from our side, because now I
no,
think it
no,
will
the
extend
schedule will be
to.
the same. Schedule will be
Wow.
6:30
To
to
No,
9:30.
I'm talking about
9:30.
in days. So,
Yeah. The days will be Saturday to how would I say Thursday, except
Fridays.
Friday.
Okay.
Okay. So Friday is off and Saturday will resume.
Correct.
And the duration of the let me
Total
say,
duration we planned was 40 hours.
I see.
Mesh.
So initially our target is 4 hours of 10 class, but due to the practical reason we had to reduce this to 3 hours. So then what will happen, instead of 10 days, it will extend to another 6-7 days more.
Fine. Okay.
So this will be the schedule. With that note, I'll sign out for the day and I'll see you tomorrow, inshallah.
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 Thank you. Thank you.
Thank
Okay,
you.
sir.
Thank you.
Thank you so much.
Bye.
Okay.
Bye.
Bye.